Thank you, Mr. Clay. Thank you, Chairman Clay. Mr. Borofsky, your audit is very forthright that this is a failure. This program is a failure and it's a waste of taxpayer dollars. But there are interesting insights. What did you discover about this modification program in terms of homeowners who get temporary modifications but then fail to get the permanent workout?
Yes, we believe a lot of this is being, and one of the problems about redefault and the reasons for redefault is that Treasury hasn't yet been collecting data. They're going to be collecting data in 2010. But we believe that one of the primary reasons for this was the absence of documented, fully documented verification of income at the outset of the program. Treasury's encouraging, in order to meet certain mileposts for trial modifications, was encouraging these verbal modifications, and I think that has fueled a lot of what you're discussing, the reason why they're not being converted and dropping out.
So verbal modifications. So basically stated income.
Yes.
Which is, I believe, from the rhetoric of this administration, which is exactly what got us into this with the subprime marketplace, is how much do you make? Well, whatever you say you make. And so in essence, the government policy has been to take private sector subprime loans and make them public sector subprime loans.
There is a similarity to the liar loans that I investigated as a mortgage fraud prosecutor.
So very similar?
Similar in that in entering into the trial portion of the program just on stated income. It didn't work then. It's not working now. And look, to Treasury's credit, they've identified that it's not working, and as of April 15th, they'll no longer be accepting verbal modifications, but it was one of the driving causes of this huge backlog and low numbers of conversions. Okay,
so your audit also says that those that get a permanent workout have a very high risk of default.
We don't know what the risk is, but we do think that it's vulnerable for redefault. It is there are several aspects of the program that make it vulnerable to redefault, and that is a real danger of this program for its long-term success.
Such as?
Well, for example, negative equity is one of the highest predictors of redefault, and the average HAMP modification, the loan is underwater, and as if left unaddressed, along with the other factors, there is the statistics show that negative equity can lead to high areas of redefault. Also, the amount of whether these payments will ultimately still be affordable. The percentages in the models don't account for other debt, crushing credit card debt and other debt that may make even a modified payment unaffordable. Also, the structure of the program is that we call them permanent modifications, but they're not permanent. They last for 5 years, and then the interest rate starts to reset, a lot like some of the subprime loans that you were referring to earlier. We just give one example where within a couple of years at the end of the program, the payment could go up as much as 23%, which again will put pressure on potential redefault if the income doesn't go up in a commensurate amount.
Okay, and what did your audit find about the Treasury's pressure on servicers to modify these loans?
Well, we had one servicer who responded that based on the public pressure that Treasury was exerting to increase trial modifications, that they changed the way that they did business. They went from doing fully documented modifications to verbal. Mr. Dodaro, in his testimony today, in GAO, and again, I don't want to speak for GAO, he could speak on this, but they've indicated very similar types of patterns, and I'll defer to my colleague to explain that.
Certainly.
Yeah, basically, the ratio of high debt to income is a predictor of redefaults. And part of the requirements in the Treasury was to get those particular borrowers with high ratios like that into counseling to help them understand the situation. And this is one recommendation that we've made to Treasury that they haven't yet implemented. We think it's important and really will help address as best as possible this question of trying to minimize the redefaults, as well as having this mortgage alternative program available. So up front, if the decision is made going forward that the trial modification doesn't make sense, there's a smooth exit strategy for short sales or other purchases to help the borrower get reallocated.
And that's not a part of current Treasury policy?
That program has been in the works but not yet implemented. That program, the second lien program, and this other one on hardest hit areas fund are not operational yet and need to be.
Thank you, Mr. Chairman, and thank you for